Welcome to week 5 of my Saturday series tracking Nifty's full week journey. I am Prakash Choudhary, a NISM-certified research analyst. If you survived the roller coaster of this past week, congratulations. We went from a massive gap down crash on Monday to a powerful recovery by the week's end. But beneath the price action, some massive regulatory shifts happened. The government solved a major jewelry crisis and the RBI dropped the hammer on banks and brokers. Today, we are breaking down the exact numbers, the sector performances, and the 5 critical policies updates for the week that we need to know for Monday opening. Before we move to the weekly quick stats, let's talk about the regulatory actions that actually move the needle this week. I want to be very clear, these aren't rumors, they are concrete actions taken this week. Number 1, the DGFT gold freeze is over. This is the biggest underreported story. For 17 days in April, no fresh orders for gold or silver imports were authorized. Over 5 tons of gold were stuck at customs. On Friday, rumors of these freeze leaked and stocks like Kalyan Jewelers and Titan tanked. But by Friday afternoon, the DGFT finally issued a fresh authorization, and not just for 1 year, but for 3 years, valid until 2029. This is a massive structural positive that removes annual uncertainty for our jewelers. Number 2, RBI Bank rejects banks' request on treasury losses. With the 10-year bond yield spiking recently, banks are sitting on massive M2M losses, estimated at 15,000 to 20,000 crore. They asked the RBI to spread these losses out over a few quarters. The RBI said absolutely not. This means Q4 bank results are going to show the full pain of these losses. Number 3, the RBI's strict collateral framework is biting. The RBI has officially ended the era of paper guarantees for brokers. Every rupee lent must now be backed by 100% tangible collateral. Bank guarantees now require a 25% pure cash lockup, and there is a strict 40% haircut on shares used as collateral. This is heavily squeezing brokerages and exchange stocks like BSE and Angel One. Number 4, CCI clears Adani. The Competition Commission of India officially closed its investigation in the Adani Group's solar bidding process, finding zero evidence of wrongdoing. This immediately relieves regulatory pressures on Adani Green and Adani Enterprises, which is exactly why we saw them dominating the top gainers list this week. Number 5, RBI tweaks NBFC rules. The RBI updated concentration risk and branch authorizations directions for NBFCs. They are making it easier for strong NBFCs to open branches, but tightening how they calculate large loan exposures to prevent systemic risk. Moving to weekly quick stats, we started the week on Monday at 23,590. After navigating the volatility, we closed on Friday at 24,353, a solid net gain of 763 points, or 3.23% in a single week. The total intra-week movement was roughly 845 points. FII started as sellers on Monday, but the tide turned. Post-Wednesday, they flipped to net buyers, bringing in approximately 490 crores to support the market's upward movement. Top gainers for the week were Adani Ports, Adani Enterprise, Max Health, Tata Motors Passenger Vehicle, and Power Grid. On the downside, the notable laggards dragging the index were Isa Motors, M&M, Maruti. Let's look at where the money flowed sector-wise. The top outperformers this week were consumer durables, metals, mid-small financial services, media, realty, and FMCG. Money aggressively rotated into these pockets as the week progressed. Meanwhile, PSU banks and private banks just managed to stay in green, largely absorbing the shock of new regulatory updates. The clear laggard for this week was the auto sector, which gave negative returns overall, heavily weighed down by early week crude spikes and state level EV policy panics. So, how do we trade this data? For long-term investors, the jewelry sector scare is officially over. Look for a relief rally in Titan and Kalyan Jewelers post Akshaya Tritiya. For NBFCs, the new rules favor structurally strong players in the mid-small financial services space, which are already showed outperformance this week. For swing traders, watch the major banking stocks on Monday. HDFC Bank, ICICI, and Yes Bank reported over this weekend. If their profit misses the estimates strictly due to that one-time RBI treasury loss ruling, it's a technically miss, not a structural flaw. Keep an eye out for buy the dips setups. For FNO traders, with the weekly expiry coming up, remember that volatility is still a factor. Wider strangles are much safer than tight straddles right now. Let Bank Nifty settle its opening gap before taking a position. Here is the week in a nutshell. Despite the early week panic and strict new RBI mandates, the market showed incredible resilience. The broader sentiment prevailed and FIIs turned out as strong buyers post Wednesday to lock in a massive 760 point Nifty gain, closing a strong at 24,353. Now is here my question for you heading into week 6. With the strong bullish momentum and FIIs back in action, do you think Nifty will effortlessly cross the 24,500 mark next week? Or will the pressure from bank Q4 result act as a major roadblock for the broader index? Drop your Nifty targets in the comments below. Let's see who nails it. If this weekly Nifty deep dive helped you connect the dots and prep for Monday, hit that like button, share it with your trading community, and make sure you are subscribed to Market Insights by Prakash. Catch you next Saturday. Thank you.